Good morning, everyone. Quite a disappointing close from Nifty in yesterday's trade. Gave back all of Monday's gain to close inch below the psychological 5K mark and close at 4986. This is the daily chart of the index, which shows that one very long red downward candle on the back of not so great volumes, but generally we tend to see that sell-offs might come sharp without the support of volumes as well. The index has moved back into a downtrend. It is now testing the 5K level, below which immediate support comes in from the 61.8 Fibonacci retracement, which is close to 4950. A look into the hourly chart is very clear. This was Monday's sharp move up, bounce back, and this was yesterday's sell-off where the market is back to its lows and below this 5K mark. The momentum indicators are inching back to oversold territory, which we sense that a move towards the 4950 support can see some degree of ease off in the selling. However, what worries us maximum is the participation of the large cap stocks in yesterday's sell-off. If we list down the stocks which contributed the maximum in yesterday's sell-off, we see the likes of ITC, an erstwhile strong stock at life highs and within the defensive space. TCS, another stock which hit life highs and have corrected quite sharply. HDFC Bank, yet another stock which was at life highs and now is giving away all the gains. So we have seen that there's a drift of selling coming in those stocks which actually showed strength and were holding on to life highs. Along with them, we have the rest of the stocks which were weak and continue to weaken, the likes of Larsen and Toubro, SBI, ICICI Bank, Infosys, and then Tata Motors as well, which joins the list of those stocks which are seeing fresh selling. This kind of large cap participation in the sell-off worries us, and if this continues, then we might see a possible test of 4950 and a break of that as well, below which supports for Nifty below the 4950 mark. The supports for Nifty comes close to 4875, that's one support, and then the 76.4 78.6 Fibonacci retracements, which is close to that 4800 level. Strategically, we recommend not to go ahead gung-ho and look to buy in this fall. Wait for some degree of ease off in the selling, because broad-based selling led by large caps may not respect support so much, and we might see a possible break on the downside. So caution, don't add longs aggressively right now and wait for some amount of ease off. Looking to add some longs, we have few stocks actually in yesterday's trade which held on okay. Coal India is one stock which bounced back, but we are more interested in Gas Authority of India and Hindalco. Relatively between these two stocks, Hindalco looks relatively better. The stock has been in a downtrend from quite some time, from its Feb high of 165. The momentum indicators are holding well. The stock continues to make lower lows. Volumes have actually picked up. Similar structure for Gas Authority of India as well, where we see a positive divergence on the RSI indicator and the index not actually falling below its previous low, in fact holding well, and we have the emergence of volumes. So net few stocks one can look into once the market stabilizes and bounces back: Hindalco, Gas Authority of India, and Coal India. Keeping in mind that the dollar index in itself is showing some strength and is trading close to that 17.5 mark when I do this recording, we might open a bit of on a weak mode in tomorrow's trade. The Europe is also trading down 1.5%. Dow futures too is down over 50 points. So yes, if we don't have a gap down, we might see some stabilization close to 4950. If we have a gap down, then there can be some degree of panic on the street. In that case, we will look at lower levels to get into the market. You have an excellent day of trade today. Trade well. Thank you.